Well, thank you so much, Mr. Vanderlee, for joining us today.
My pleasure.
First question for you. Heritage and culture are two of several issues emphasized on the website by ClearBridge Investments. If you could just tell us how these factors influence your investment philosophy.
ClearBridge is known for its continuity and experience. We date back until 1962 with our predecessor firms, and we have a wealth of experience. The average experience level for portfolio managers is 25 years, and for research analysts, it's 15 years. And the average tenure is 18 years for portfolio managers and 7 years for research analysts. And it tells a lot about the kind of firm that ClearBridge represents, that level of continuity. So we tap into this vast pool of resources and experience that the firm offers to us.
Great, that's wonderful. With regard to generating income in equities, what industries do you believe offer the most potential for growth?
I see three opportunities from an equity income standpoint. Number one, it's in energy MLPs. Number two, in dividend-paying stocks. And number three, in REITs. And I'll briefly mention why these are the three big opportunities. Energy MLPs are a tremendous opportunity because the U.S. is undergoing a renaissance in energy production that's quite frankly nothing short of spectacular. Volumes are surging as a result of this renaissance, and energy MLPs are very well positioned to capitalize on this opportunity, not just from a current income perspective, where on average they yield around 5.5%, but also from an income growth perspective. Dividend-paying stocks, which is a second opportunity that we have identified, also present a large opportunity. Why is that? Well, if you look at the demand for income in our country, it's huge. You have a lot of folks in need of income and in need of inflation protection, and it's hard to get on the bond side with yields near generational lows. Meanwhile, though, many stocks yield more than the corporate bond equivalent. It's a phenomenon I've not seen since the 1950s. So already you're getting more income out of dividend-paying stocks. But perhaps more importantly, there's also a strong growth component to it as dividends are poised to rise, and that gives you inflation protection. So we believe that dividend-paying stocks is another solid opportunity. And then lastly, REITs is an opportunity. The real estate investment trusts right now at this point in the cycle have very sound balance sheets and are generating healthy free cash flow, and the dividends are not only secure but are poised to grow. Meanwhile, some of the securities that we see out there are selling close to net asset value, meaning that they're not exactly expensive, setting the stage for potential capital appreciation. So these are three major opportunities that we see ahead of us. It's important to stay flexible so you'll have the ability to emphasize one over the other, but there's plenty to choose from here.
Definitely, I agree. And then concerning this strategy of deriving income from equities, what distinguishes the team's approach from the competition?
The first element that distinguishes us from the competition is our flexibility. We have the ability to utilize many asset classes like the ones I mentioned, energy MLPs, REITs, dividend-paying stocks, but also convertible securities. And having that flexibility is really unique. Secondly, what distinguishes us is our expertise in the matter. We have a long history of successful investing in all these equity income asset classes, and that really differentiates us from the competition. And then thirdly, I would add that we are right now managing this with a team that has all the expertise required to be successful in the fund.
Great. And then also your portfolio managers play a critical role on behalf of ClearBridge. Why don't you tell us about their areas of expertise?
ClearBridge is managing roughly $110 billion in equity capital. And we are the largest equity affiliate of Legg Mason, and we are a big shop.
Sure.
And there are three areas of expertise within the franchise. There is the equity income solutions suite of programs, high active share, and low volatility. I'm part of the equity income solutions program suite,
Okay.
and we manage roughly $27 billion within that. And it's known for its tactical dividend income fund, its equity income fund, its dividend strategy separately managed account program, and our MLP offerings. And specifically, the dividend strategy program, which has been over 10 years in the making, has a phenomenal track record, and so do the other ones. one other one I would like to point out is the Tactical Dividend Income Fund. It's actually a rather new offering. It's a little less than 3 years old, but it's gathering a lot of momentum in the fund business, in the space, because of its ability to capture high income streams from all these asset categories that I mentioned, MLPs, REITs, and dividend-paying stocks, but also retaining the potential to see that income stream grow over time and also have capital appreciation over time. So that one in particular looks very interesting. But ClearBridge as a franchise is very well positioned for the times we're in, and we offer a broad palette of solutions to our investors, both retail and institutional.
That's fantastic. What is your outlook for equities for 2015?
My outlook is more longer term. I don't necessarily manage the portfolio for just a 1 year time horizon. And that long-term outlook is also underpinned by these demand factors for income. It's very hard to get income in today's environment. Bonds are near generational lows in terms of their yield, and meanwhile you have tremendous demand for income. For example, there's 76 million baby boomers that are going into retirement with insufficient savings for a lot of them. And when you think about what they need in retirement, they need nothing short of an investment trifecta. They need income to supplement the lack of savings, they need income growth to stay ahead of inflation, and they need capital preservation as they are in the retirement years of their lives and cannot afford to take too much risk.
Right.
Bonds do not offer this trifecta, but equity income programs like the ones we're discussing do, because not only are you getting already a higher income stream from the dividends and distributions, but you're poised to see that grow over time, which is giving you that inflation protection. So we think more longer term in terms of managing the portfolio along those lines. Having said that, the outlook for 2015 is constructive, and that's really underpinned by three factors. Number one, the balance sheets of corporate America are in a very good shape. There's lots of cash on the balance sheet, for example. Number two, free cash flow is abundant. Corporate America is generating a lot of cash.
Right.
And meanwhile, they continue to be rather stingy when it comes to paying out dividends because payout ratios are near record lows. And then number three, we are looking at valuations, an important metric obviously, and valuations are not stretched. On average, we're selling at roughly 15 times earnings, but I can identify securities that are well below that multiple, and that is not very stretched in an interest rate environment that is offering very low yields. So for those reasons, I remain constructive on the long term, but also for the next 12 months or the 2015 year.
Very understandable. And then also, what else should prospective investors know about ClearBridge?
There's a number of other elements that I would want to highlight. Number one is our research capability. We have 30 analysts. They cover everything that is out there in terms of the gig sector. So it's a broad coverage universe from our research department, which is well funded and researched. And we also have an independent risk committee that is looking at the portfolio independently from a risk perspective and shares their findings with the portfolio managers so that the portfolio managers can look at this and further optimize the portfolio from a risk perspective. So those are two other elements worth mentioning about ClearBridge.
Great. And then I'm going to backtrack a little bit and ask you, what have been some of the best performing sectors for the portfolio that you speak of in 2014?
One of the best performing sectors for us this year so far has actually been energy. And that is mostly the result of security selection in MLPs. Not all MLPs are created equal. Some MLPs, in my opinion, are not very attractive from an investment standpoint, but there's a cadre of MLPs that is very compelling, especially those energy MLPs that have fee-based business models. In other words, they do not depend on the underlying price of the commodity, crude oil, natural gas. They're independent of that. They depend on volumes, on throughputs, and those are surging as a result of this resurgence in energy production that we're witnessing in our country. We're also looking for companies that not only have fee-based business models, but are having long-term contracts, sometimes up to 20 years, which gives you a lot of stability and predictability in the cash flows. Oftentimes these contracts come with inflation escalators built in, giving you a measure of inflation protection as well. And in addition to that, not only are we seeing a lot of predictability and visibility in the current income stream, we also see quite a bit of visibility into the growth aspect of it, as the infrastructure still needs to be built out in order to facilitate drilling in these rather unconventional places. And that means a lot of growth, including organic growth. So not only are you getting current income streams that are interesting, you're also getting income growth on top of that. Meanwhile, these securities are compellingly valued. So there's a cadre of these energy MLPs along the lines that I discussed that have really propelled the portfolio since we have owned them, and I continue to be very constructive on the future of that as well.
Wonderful. And then one last question for you before I let you go. Just based on the Pristine Advisors Conference, what are your thoughts on the conference, and how do you think that it can benefit not only advisors but also investors?
I think it's a terrific venue for folks to learn about the type of different solutions that are out there. In the closed-end space, traditionally you see a lot of fixed income offerings. ClearBridge is really distinguishing itself by having a broad palette of equity offerings, not just the capital and income fund that we're here to talk about, but also energy MLP offerings that we have. We manage roughly $8 billion in the closed-end space alone in these offerings, so we're a big player.
Right.
And giving folks an energy solution platform or a more broadly diversified platform like the Capital and Income Fund, I think is an important addition to what traditionally has been more dominated by fixed income. So we're very excited to offer these solutions in the marketplace, and delighted to be here.
Fantastic. Well, we're delighted to have you.
Thank
So
you.
hopefully we'll see you next year. Thank you so
Absolutely.
much for coming in.
Thank you. Bye-bye.